Yo, what is up, everybody? Welcome to the Dream Huge podcast. Man, super excited for this one today. Folks, we love to share success stories from other huge dreamers, folks in the real estate business, entrepreneurs, movers, shakers, influencers, and more. And hopefully, these stories will help to motivate and inspire you to also dream huge, baby. And today we have my man Andrew Kim on the program today. How you doing, Andrew?
Doing well, and yourself?
Good, man. Excellent. Fired up to talk some real estate investing today. So Andrew Kim offers a single family asset management platform called Share. And you can find him online at sharesfr.com. So Andrew, tell us a little bit about what you do over there at Share.
Sure. So I'm the co-founder, CEO of Share. We're an end-to-end asset management platform, and everyone's probably wondering, like, what's asset management? We built this out of virtue of our own problems. We are an end-to-end solution. We look at all of our clients who are everyday investors like me and you, and help them 10x their portfolio over the next 10 plus years while they get to focus on their personal and professional career. And what that actually means is understanding sort of everything from soup to nuts in terms of what kind of capital you have access to, what type of real estate risk strategy suits you best, and actually deploying your capital and doing all of that for you from end to end. So from everything from forming your Series LLC to getting your account set up, starting an active search for a home, acquiring it, and then taking on a long-term management role. So we'll outsource all the property management, renovations. You'll only ever speak to us, and you'll log into our account to get your monthly financials, year-end tax documents, and always be looking forward to the forward-looking strategy of how do we actually leverage your assets and grow your portfolio. So more than just a property manager.
Sure. So you're going to help investors actually locate those single family rentals, and then run those, help them run those, and then in return send them monthly or quarterly payouts. What does that look like?
Yeah, so it'll be monthly payouts. So they own it directly. We treat it like an institution, like you're investing in a private equity firm or a REIT. We give you that sort of asset management, but it's your direct ownership. You own it. You keep all the upside. But yeah, on the monthly basis, they'll get their rental income distributions. They'll get their financial statements and everything like they would if they were doing the management themselves.
And what markets are you in?
We're across the Sun Belt and then the Midwest Rust Belt. We're not in, we are kind of tiptoeing around certain metros, but typically those are the areas we operate in.
Which is interesting because you're based out of Canada, correct?
Correct. Yes. I'm a Canadian. I've lived in the US for a bit, and I still kind of identify myself as an American.
Gotcha. So, for my newer investors out there, Andrew, how is that possible? I want to invest in something that's right here in my neighborhood so I can go and check on it, and if I got a leak, I can go fix it. How is that possible to reach all across the country like that successfully?
Yeah, so in terms of picking the markets, I think the beautiful thing about the US market is there's a lot of public data. So we can compute tons and tons of data to figure out the right metro, the right zip code. And then we partner with institutional like real estate operators. We're talking, these big contractors, multi-state, property managers that are multi-state. And then we leverage our sort of single master policy because they look at us as an institution to leverage their federal, across the country teams to actually help us, do the management, the renovations, and all the necessary moving parts.
Very good. The one thing I really liked that stuck out to me about your setup is scale. You mentioned scale, and that people who are not necessarily real estate investors by trade, they may have another totally different occupation. They can utilize your company to help them scale. What does that look like?
Yeah, so taking, most of our clients come from they've got a few units under their own management. They've done it themselves, but they realize how exhausting that could be and they want to scale their portfolio. So they tend to kind of come to us because they don't want to be hands-on anymore. They want to be extremely passive. So what we do is we look at their portfolio, say, hey, look, you could probably pull some equity out. And here's a different type of asset class or out of state asset class that is probably more efficient in terms of cost and returns. and then we help them design their strategy, and then we go and find those homes for them. So investing like you're in your backyard, but across the country.
Why do you like single family rentals?
We think it's the vanilla entry point for a lot of investors that also don't want to go out and potentially raise capital for larger multifamily or do larger joint ventures. Whereas I've got my own capital, I want ownership, I want to keep it in the family, I don't want to have to raise capital, I don't want to do this joint venture GPLP problem or scenario, and they just want to deploy the capital and own real estate directly. So that's that, and we look at that as single family as sort of the safest, lowest risk entry point from a capital and sort of tenant profile perspective. And then as you graduate, go into sort of multi.
So the investors that are coming to they can start with as little as just one single family,
Correct.
and they're looking to bring probably like 20% down. What does that look like?
Yeah, depend on the type of asset class and the loan type. If it's a DSCR with today's rates, they're probably coming in with 25 plus points percent down payment. But if they're utilizing like a Fannie Freddie or FHA, then they can come in with something lower.
Okay, excellent. And how do you guys get paid?
Two fees. There's the acquisition fee, a buying fee, which is 3% of the purchase price upon closing. And then there's an asset management fee, which is anywhere from about like 0.25% to 0.75% of the original purchase value annually. Just like the property management fees, we only collect that when there's a paying tenant in place.
Excellent. There's so many different ways to be in and invest in real estate. And this is a fresh, unique perspective for me. So I think it's pretty cool. So what's a little bit of your background, Andrew, and how you got to where you are today?
Yeah, so I think my whole life I've been a pretty big risk taker. But I think I learned from my parents. They were risk takers too, but not very good. So they made a lot of bad mistakes early on. And I think what the biggest learning, experience for me was is like I need a safety net if I'm going to continue taking these risks. So I got into real estate right out of a few years out of university, but was always saving my capital. But academically and professionally, I've always been in the technology world. So I've built and sold technology companies, and that's what brought me to the US. I was living out in the Valley, built and sold my last company there. But in parallel, constantly focusing on building a real estate portfolio. And, fast forward 10 years after my first investment, I look at my portfolio and I'm like, it should be much larger by now. And what I look at it, I'm like, the reason why it's not is because I was not able to commit as much time focusing on that because my profession was so demanding, and then growing a family, so busy, right? So that became sort of the birth story of Share, where it's like, look, I think there's a layer on top of the property management company that needs to be focused on. So it's like, the asset management. It's like somebody investing in a REIT. They're gunning to make as much money as possible, finding every single which way to either save money or make more money. So taking that same philosophy, but not gouging and keeping like 25% of the upside and keeping it for the end client. So that was Share. It's like the intersection of technology and real estate. So two of my passions.
That's awesome. And yeah, that's exactly it. Helping others succeed is how we will all succeed in the end. So rather than yeah, you keeping all the profit on these deals and offering a small percentage, which is often the case. Usually
Yeah.
the guy that goes and finds the deals is keeping all the equity for themselves. And they're paying a 5 to 10% return to the investors, which is fine, and
Hmm.
that's a fine avenue as well. But maybe they're not able to grow and scale as much as someone like you, who, yes, goes and finds the deals, but lets the investor keep the majority of that. And you're just tagging just a small fee, maintenance fee, and acquisition fee on top of
That's
that.
right.
So I really
Correct.
like that.
Exactly.
How has your business been? Has it been busy? Has it taken off?
Yeah, in 2 years we've done over 70 units. So it's growing quite aggressively. So we're backed by venture capital firms, so technology investors. Some of these investors also invested in Airbnb, Acorns, Robinhood, so other financial and real estate companies. So yeah, we're starting to see an uptick, and obviously with recent rate cuts, you're starting to see more of that now. Supply is still limited, but demand is starting to pick up.
Will you see the majority of your single family rentals be long-term tenants? If so, yes. Are you also doing short-term or mid-term tenants in those?
Yeah, good question. So, to my earlier point, like safe and steady was we're focused long-term rentals. And then yeah, we would say that, before we get into shorter midterm, we'd probably step sideways into long-term multi. Would probably
Okay.
be the next step. Yeah.
Yeah, I think it's funny. People get enamored with the big rental dollar signs when it comes to short-term rentals. But
Yeah.
once you factor in all of the extra work, extra cost to furnish the unit, extra overhead, extra time involved in pleasing the all the different tenants that move in and out because the turnover is a lot higher.
Yep.
Yeah, you almost unless you really truly have a system down that just caters to that. Yeah, I prefer the midterm to long term as well.
Yes, yeah. I actually like if we were to go anywhere shorter than long term, midterm would be probably where we'd go, and we would probably find a good niche of professionals or like working with insurance companies to kind of accommodate displaced families and temporarily from like whatever disaster relief, whatever that might be. But yeah, short term is like we've done the math on it. It's like your repair maintenance, your downside allocation is so huge, even though the dollars go up. And then all you need is one bad guess to just ruin everything.
Yes, sir. So, where are you finding your deals? On market, off market?
90 plus right now are off market. We will start kind of going into the MLS, but I think, we compete with all the large institutions. They're all plugging into the same thing, running their own algorithms, but majority of our deals are coming from off market wholesalers or large institutions that are doing dispositions of their portfolio.
Hmm. So you have, built relationships over time with different wholesalers in those marketplaces. So you're able to reach out to them. Do you also like leverage direct mail or anything like that?
Yeah, so we actually, well, yeah, we work with a lot of wholesalers. They're typically multi-state wholesalers. They do a couple hundred a month, typically only, again, to institutions. So we plug into a lot of them. We don't, we ourselves won't probably get down to the level of directly acquiring from the seller, just because that does require quite a bit of operation, legwork. But yes, our wholesalers are the ones that are doing that first touch to the client. They've got mailers, they've got lists, they're calling, door knocking, all of that.
Gotcha. Which makes sense. Like you said, let the specialists specialize.
Exactly,
They're good
exactly.
at, leverage them, and you know what you're good at. So you guys can all stay in your lane and just continue to scale.
Yeah, and we just like with all of our clients, we know what their buy box is. So we start sending that preemptively to our wholesalers, and they're looking exactly for that. They know our pricing model. So they know that like if we're going to give them volume, they've got to kind of give us some discounts as well and not take such a huge assignment fee.
What what can I get into a single family rental for, and what is maybe your average priced single family rental?
Yeah, so we go with the sort of ABC profile of home. A's are your sort of mid to high 300,000. These are your, four and a half caps, more appreciation plays, low risk. And then you've got your C's where like mid 100, high six caps, yeah, 150K-ish approximately with lower appreciation. So we can run the gamut there.
So 100 to $150,000 property, you're looking to rent those for anywhere from 1,000 to $1,000
12 to
range.
14. Yeah,
Yep.
exactly.
So you can hit that six cap. Very good.
Yes.
Gotcha.
Yeah.
Just like to talk some numbers for those who are interested in real estate investing. Hey, folks, there's 100 different ways that you can invest in real estate. Um, and we like to say it doesn't take any money to get in because you could bring an investor in for that down payment piece, and you could get into real estate investing for zero down. But know this: it does cost money to own the real estate. Okay, so buying it may be costing you nothing if you're able to leverage some partnerships, but owning it definitely costs you something. And I don't know how turnkey your properties are, but I like to tell my investor clients plan on losing money year one. And because if we play for a long term play, because oftentimes the properties are in disrepair, the rents are too low, the landlord is someone that's just been putting things off because they've planned on selling for years, so they haven't been putting back into the property. So is that a fair statement? Plan on losing year one.
Yeah, we tell that we put in places like here, even though this is your down payment, your closing costs, here's another tranche of capital that most people don't think about, which are your reserves. And here's the fees you're going to pay, your tax, your mortgage, all of these other fees that everyone always forgets about, which are the losses. And so here, now all of a sudden your 20% down payment is actually roughly 40% of the purchase price, right? Because now you're thinking about the downside protection. But we bring that up front. That's what we say we're pretty vigilant about. But like, look, it only really costs you this much to close, but these are the expenses you're going to incur in year one. So our cash flow target starts purchase date plus X months, right? So it's like you're not making money until you got that place leased, and still, like, yes, to your point, you might see a dip until a rolling 12 months comes into place. So, but yes, a very good point. I think a lot of new investors always kind of hit that, like, why am I not making money? It's like, you just bought this. Like, we are renovating and leasing. You got to pay some expenses. Make sure you have these reserves.
Yeah, but here's why I love the strategy, because over time, then I will never lose because
Right.
these are long term plays. So, yes, I'm going to take a hit year one, not always, but most times, but I'm in this for the long run and I'm reinvesting into these properties. I'm providing quality housing, much needed quality housing for whatever community I'm investing in, because we
Yep.
need quality housing now more than ever.
Yep.
So, we're reinvesting in those communities, and we will be rewarded for doing that, even though it may take year two and beyond. But we will never lose.
Yes, 100%. Always a long tail, 10-year outlook. These are fruit tree seeds you're planting, and the best time to plant a tree is 10 years ago. So, think about the long run.
That's right. Andrew Kim, check him out at sharesfr.com. Are you on social? Can folks follow you on social?
Yeah, just our main one is like LinkedIn and Instagram. Share SFR. You can find us on both Instagram and LinkedIn, Facebook as well. Those are the big
Perfect.
ones.
All right. Final thoughts, Andrew?
Action, action, action. Don't, if you're first time in, you can only do so much research. You're going to keep finding something that's going to slow you down, but at some point, you just got to pull that trigger.
Take action sooner rather than later. You said it, man. The best deals I have are the ones I bought the longest ago.
Yes.
It's really that
Yes.
simple. Don't try and time the market. Don't sit on the sidelines trying to wait and overanalyze. Take action. Great advice from Andrew Kim at sharesfr.com. Okay, Andrew, well, thank you for your time today. We got that
Thank you for
in under
having me.
20 minutes. Much appreciated. And we will help you spread the word of
All right.
sharesfr.com. Thank you for
Thank you.
coming on.
Thanks for having me.
Everybody, thank you for watching and listening to the Dream Huge podcast. And as always, remember the rules: work hard, never give up, and dream huge, baby. Let's see the guns, Andrew. Yeah. Appreciate you, man.
Awesome. Thanks for having me.
Yep. Okay, give that one.